Hi there, this is Christian Dye and Mike Stewart, May 13th, 2021. This is your Vancouver market update. So let's do a quick little market update statistical review over here. April of last month, listings were about 342% higher than the same month in last year. But it was about a 14% decrease in homes sold and then the prior month over here. And Mike is going to talk about that a little bit more. But let's talk about prices over here. Now, when there's a sales to listing ratio, which is when you take the number of sales and divide it by the listings, you get a percentage. Now, analysts say that when this
within a given month.
Yes. Oh, in a month. When this ratio is below 12%, then that is a signal that sales are trending downward. When this percentage is above 20%, that means the signal that prices are trending upward. So where have we been? In February, notice 41%, 61%, 41%. And then in March, they were 52, 79, and then 65. So prices were viciously going upward because when you look at the sales to listings. But we talk about April. In April over here, when we had these sales to listings, the numbers have now gone down, not below 12%, but notice that the numbers have significantly cooled. And Mike, what would you say is one of the main reasons why these numbers have gone down from March to April here?
Well, yeah, basically what it is we're just seeing an expansion of supply that is normal when we have a big run up in sales activity. People who own properties who are thinking of selling are like, you know what, it's a fantastic time to sell. Prices are rising, volumes are high, there's a lot of liquidity, financing is cheap. Let's put our place on the market. So they put their place on the market. And then, but, so you get this 1 month of big sales. And like we said in the last month's podcast or webinar, the highest sales on record. People are like, okay, you know what? Let's put our place in the market. We know we can get top dollar. We know there's buyers out there. We know the place is going to sell. It's not going to sit around. Now, and another thing to notice too, it's an interesting market dynamic. Everybody thinks that you get the best deals when the market's soft. Not necessarily, because when the market's soft, you miss out. You don't get those properties that are really well taken care of, really special, really nice, that are owned by people who have resources to hang on. What you find is when the market is doing well, that's when people who have the money to hold on decide to put their really nicely maintained special properties on the market. And that's when those properties come available. So it's for a buyer, it's a very, very good time right now because you've got extremely low interest rates. You've got a big expansion of supply, which is going to make the buying process a lot more pleasant, a lot easier than it would have been, say, 6 months ago, or sorry, 6 weeks, 6 weeks, 2 months ago. 6 weeks, 2 months, sorry, 6 weeks, 2 months ago, you on a listing, you'd get, 10, 12 offers. It would just be insanity and just crazy. Now, like for example, I helped a client of mine in Alberta with a purchase in Kitsilano, single family house, 40 by 122 foot lot that he's looking to redevelop. And there was only 2 offers. And the second offer came in very last moment, didn't seem like it was that strong of an offer, and we won it. I've got clients who purchased a house in Caulfield in West Vancouver, and we're able to negotiate down the price on a house that is in a very nice location. It's a very nice lot, is large, but is a little bit, sort of a little bit worn, a little bit, in need of maintenance, but a very solid, good house. So as a buyer, on the flip side, it's become a little more challenging as a seller. And it depends on the market. If you're in North Vancouver, if you're in East Vancouver, if you're in the Fraser Valley, still, it's going to be very easy for you to sell, and it's going to be more difficult to buy. But, places like, but like in East Vancouver, you can actually see properties and take your time and look at them. In the Valley, you take your time and see properties before you have to put an offer. So the market conditions have improved for buyers marginally, and maybe a little more challenging for sellers, but still it's good for both sides.
Yeah, no, I do feel that the market prices are going to slowly continue to keep rising based off of the numbers alone. And when we think back at the forecast of what was given in our previous sessions, there were numbers ranging all the way as low as 4% up to 9% for the year in 2021 outlook. So I want to show over here what the 1 month change has been for the last 3 months. Back in February, if you look at this 1 month change, all of these numbers, 1.8, 2.6, 3.1 in Vancouver real estate over here. Then we'll take a look at March. Again, the 1 month change, 4%, 3%. And that's where we're gaining a lot of steam over here. Then when you look at April, again, the numbers are still climbing up. So yes, maybe the activity has slowed down a little bit, but from a pricing perspective, if you just go by the numbers, they are still trending upward over here. So
100%.
Yeah, like
go ahead.
If we were to dissect this, even a little bit more to product, single detached family homes over here, if you were to look at the 1 year change, the 1 year change over here, it's still quite prominent that we're having a significant amount of year over year. And even if you look at the 3 year change, all the numbers keep going up. When we look at the condo market over here, again, it's not as much as the single family, but it still is trending upward. So there is no prices going downward. I see from the numbers over here. So when we take a look, Mike, you've already sort of touched on this as to what's happening right now. But tell us what you're thinking, when it comes to if you were a buyer, for example, and you're going in on an offer, do you feel that it's appropriate that you don't need to go over the asking price now? Or do you sort of feel that that still is a bit of the climate?
It depends on the product. If you're competing, the minimum you need to go in a multiple offer situation, quite frankly, if you want to have a chance, is full price. In most cases, you're going to probably have to go over. And, if you're working with a realtor, make sure to talk to your realtor, get their advice, and see what they say, because a good realtor should be able to guide you in a multiple offer situation and help you, because there's a difference between asking price and market price. And a good realtor will be able to calculate for you the market price of a property, irrespective of what the asking price is. Because very often, sellers agents will price a property below the mark. So say, for example, this is market value in a property. They'll price a property, they'll put the asking price here so that they get lots of activity, so they immediately hit the asking price, or they might get a buyer that overshoots and goes over. So yeah, having a good realtor, relying on them for advice on what kind of offer to present is really, really important. And work with somebody who knows the product, knows the area, and can speak, and has a track record of winning these things, because that is so important. And just one last thing I wanted to go back to in terms of market sentiment. If you look at some of these numbers, you're looking at a 3.1% change in prices overall composite for the Lower Mainland. If you average that out, if you annualize that, so if you take that and divide it by 12 months, 3.1% in 1 month is a 36% increase in value for a whole year. So we're looking at some pretty steep price rises. And the second reason why I think those price rises will continue is if we look at the sales ratios. So for townhouses, sales ratios are around 70%. Okay. Anytime sales ratios are over 12% for an extended period of time, prices are going to rise. Okay. So single family houses, you're looking at sales ratios of around 37.4%. Condos about 51.5%, and townhomes about 70%. But within the market and different places, you're going to have a lower sales ratio. Like, for example, downtown Vancouver, quite a low sales ratio for condos. So that actually could be a place where you can get some real value. Okay. So I think there are some pockets of real value. Downtown Vancouver, absolutely. Because I think a lot of people are still concerned about COVID. I'm personally surprised that there are, but my business partner for real estate, whom I work with very closely, he hasn't been doing a lot of things. His wife has not been doing a lot of things because they're concerned about like not exercising, not doing anything, not going to gyms, and certainly not moving home because they're concerned about COVID. And a lot of people are that way. And I think once everybody's vaccinated, people are going to realize that downtown Vancouver is a fantastic place to live, and that the benefits of living there are great, and the relative crowding you get, and the busy restaurants and patios and shopping and all that stuff. people are going to want that, and it's going to come back. And I think prices in downtown Vancouver could very well see a surge once we have herd immunity and widespread vaccination.
No, that, you know what? We can only hope that everything starts to look back to normal over here. So you've definitely sort of touched on my next questions about the sort of your future outlook for 2021, what's going on and things of that sort over here. What I want to do now is I want to kind of invite people, if they've got any questions, to now start putting it in the chat, okay? And then we will field your questions as much as possible. So while we're waiting for people to throw questions in the chat over here, I wanted to ask you, Mike, a couple of things about what's going on with potential new stress test in June,
Yeah.
And sort of your sentiment on rates and people losing out on their sort of locked in rate. What do you sort of think is going to happen with real estate? And tell us a little bit about this, about the new stress test here.
Yeah, so basically the stress test is a way for the federal government to control the real estate market in a way that doesn't involve them raising rates for the overall market, because the Canadian economy is the only way the Canadian economy is competitive internationally and with the United States is by having a low Canadian dollar. By having and to keep the Canadian dollar low, the Bank of Canada needs to keep rates low. Now, the side effect of that is to push up asset prices, particularly real estate, because it makes it so inexpensive to buy it. So what the federal government does to control the real estate market while maintaining low interest rates is to tighten the mortgage qualification rules. So when somebody goes in and qualifies, you're not necessarily qualifying it like if you can get a mortgage at 2% or 2.5% or 1.75, you're with the stress test, if I'm not mistaken, they're qualifying you at 5.25%. So they want to know if you can pay that mortgage and support that mortgage, even if rates hit 5.25% or above that. And the reason why they do that is for two reasons, actually three reasons. One is they want to say, hey, look, we're doing something about housing affordability in Canada as part of an election strategy. Two, they want to keep control of the real estate market, because if the real estate market goes crazy, it can throw the overall economy out of kilter. And then the second reason the third reason they're doing it is because they want to protect consumers from themselves. If you look at the U.S. financial crisis, a lot of that was caused by irresponsible or a lack of proper regulation, where you had sort of two things happening. One, you had the mortgage business saying, yeah, let's give everybody mortgages. And then you had the politicians saying, hey, let's give everybody mortgages. And there wasn't anybody saying, whoa, let's slow this down, because everybody was saying the same sort of thing. So it's a good, having a stress test can be a bit of a pain in the backside when you're trying to sell a property, but overall, I think it's a good thing because it keeps us safe.
Sure. One of the questions. Yeah, one of the questions says there's been mentions. Let me go back here. There have been mentions of interest rates increasing to cool down the market. How significant an impact will this have overall moving forward? So I'm not sure if I don't think the interest rates are increasing in order to cool the market. The interest rates just happen to be increasing. And as an effect, that may cool the market down. I've seen this several times in my career, but Mike, I'll let you give your answer first.
Yeah, back to what I was saying. I think you may see the stress test, but what's happening right now is the bond market is changing because of perceptions of future inflation. But I don't see inflation getting that high, because if you look at the past, in the past, the world economy was cellular. So you had, if we didn't have enough shirts, cars, and socks in Canada, well, too bad. We can't bring any more because there's 20% tariff we bring in from the States. Nowadays, so what would happen is in the past, the price of shirts, cars, and socks would go up, and that would be inflation overall on the economy. Now, if you run out of shirts, cars, and socks in Canada, you can get them in the States, you get them in China, you get them in Mexico, you get them in Europe, boom, bring them in, low interest, low tariffs, easy to ship, cheap to ship. So no upward pressure on overall things. I think where you're going to see your inflation hit is in cryptocurrencies, real estate, the stock market, because there's limited amounts of those things, and those are not easily replaced things. So I think interest rates eventually are going to go up, but I don't see them surging. I don't think we're going to see 10, 12% interest rates, when I was a kid, or 20% rates when Paul Volcker raised rates dramatically in the early 1980s in the United States as the head of the Federal Reserve. So yeah, sure, interest rates are going to go up, but I don't think they're going to go up much, and they may go down if the economy has any problems going forward. But I'd love to hear more of your questions on this because I find this very interesting.
Like I guess sort of my answer to that question is I've seen interest rates go up several times, and then I've seen this effect on real estate, and it really wasn't a dramatic enough effect to cause it to crash or to cool off. People always need to buy, and when they're worried about prices that are going to keep going up, if the rate's at 3, people are still buying at 3. If the rate's at 2.5, they're still buying at 2.5. The rate, what I did think is what we saw in the last 2 months was that there was this incredibly low rate mixed with this pent up demand, and the two of them kind of crossed paths, and then all of a sudden there was this big surge of people wanting to buy.
Yep.
Okay, so the next question over here, pretty good question. If I want to sell in New West but want to buy in Abbotsford, is it better to use the same realtor for both the buy and the sell, or is it better to use 2 separate ones where they know the areas differently? My answer to this is it really depends on the realtor and your comfortability of how well they know both areas. You could have a fantastic realtor that will do an amazing job on the buy side and the sell side over here, but I think it's too hard to answer that. I think it's more about the
I
comfortability.
can answer that one.
Yeah,
I can answer that one.
Let's hear yours.
I can answer this. So I would probably have 2 separate realtors. Reason being is those markets are so different and they're so far apart and they're so specific. What I would do is, and here's a way to do it. So say, for example, you're in New West and you have a realtor you like, and you don't want to, sort of make them feel bad that you're using somebody else in Abbotsford. Ask your New West realtor for them to refer you to a good realtor in Abbotsford. Okay. That'll make your realtor in New Westminster feel happy. And then the Abbotsford realtor will take you seriously because you've been referred by a realtor and they know that you're for real and you're not going to waste their time. Now, another thing too is if you don't have a realtor that you want to work with in New West or in Abbotsford, I have somebody fantastic in Abbotsford and I've got somebody fantastic in New West if you need help in either of those areas. But if you do have somebody in New West or you do have somebody in Abbotsford, just ask the realtor that you're working with, that you have a relationship with, that you trust for a referral to somebody in the other area, and they'd be more than happy to help with that. Yeah. We got another one.
What about the foreign question? Okay, so what about foreign buyer's fee? Say a non-Canadian spouse and a Canadian buy real estate together. Does the foreign buyer's fee apply? I think that's the question.
Oh, okay. I just didn't see that in the chat here. You know what? That's beyond the scope of my licensing. I think what you need to do is talk to an accountant and you need to talk to a lawyer about that, because that is a tax that is something that you should take very seriously. And go with an accountant's opinion, go with a lawyer's opinion, because that's not a tax where they,
I'm unsure of that answer myself, so I would talk to the accountant. This other one here, when COVID starts to slow down with increased vaccination, how do you feel it would affect the markets? Better for buyers or better for sellers?
Depends where it is. So I think what you're going to see is when we have herd immunity, I wouldn't be surprised to see places like the Fraser Valley, Bowen Island, Nanaimo, Squamish, those places that are further out that just blew up because of COVID. I wouldn't be surprised to see those markets soften, maybe even see price declines. And I think you're going to see the cores of cities. So downtown Vancouver, Metrotown, North Surrey, Lougheed Town Center, all these places, Metrotown, all these places that are super dense that people have been moving away from because they're worried about COVID. People are going to move back to those places. And I think you're going to see prices go up for those. And I think you're going to see demand go up for those. And I think you're going to see that craziness that we've seen, in the Fraser Valley or on Bowen Island or, in Squamish or, those places, that craziness is going to go into downtown Vancouver. One thing I just wanted to, downtown Vancouver or into the urban cores that we have throughout the region. One thing I just wanted to go back to, sort of circle back, is that question about interest rates. So I've been doing this for about 16 years, and I've seen a booming market for real estate when interest rates are like 5%. So the real estate market can go crazy with very high interest rates, because what happens is the Department of Finance, which controls the stress test, which we were talking about before, pushes out mortgage amortizations. When I started doing real estate in 2005, you get a 40-year amortization. So 40-year amortizations are very good when you have a higher interest rate. You're not paying very much off, but you're paying huge amounts of interest so that if it's an investment property, you get huge write-offs on it. So just because you have high interest rates doesn't mean you're not going to have a rising real estate market.
Yeah, no, I agree. So yeah, if there are any more questions, feel free to throw them in over here. I just kind of wanted to talk a little bit about some final conclusions over here. One of them I would say is, and I've always said this, don't try to time the market. It's a dangerous thing to try to time it. Find something that fits with what you're looking for, whatever the rates are that happen to be, check to see your cash flow, see that you could afford it. My predictions on the market is that I think there will be a little bit of added pressure if anyone is still holding on to a lower rate. If they locked it in at 1.8 or 1.7, they had 120 days left. That should be coming to the end of the cycle pretty quickly over here. But the new rates now seem to be sort of in the low twos, still historically low. Based off of the data and based off of what we've been seeing, 2021 will remain upward trend for Vancouver real estate prices for sure. And, to talk a little bit about what I'm doing with my clients and my financial practice over here, I am reviewing a strategy and ensuring they take advantage of the opportunities in a very, very safe way. To give you a little case example over here, think about a married couple. They own their house, but right now they're thinking, maybe it's a good time to upgrade. And they're holding on to a low rate. Maybe it's time to move up. But now they also like the idea of possibly investing in another property, and they're wondering, when I sell my home over here, maybe I should try to free up some of the capital and get another property. So the options might be, okay, they want to sell their house, buy a larger home, and that's it. No extra property. They want to sell their house, buy actually a smaller house, and use the extra money that they're going to get to invest in another property. Or an option might be they want to keep their house and still buy the extra property, maybe by leveraging against the equity against it for an investment property over here. This over here is a perfect example of how I can help a client, because there's an analysis that needs to be done here. And if you're able to do this analysis on your own, then you actually don't need me. But if you're not able to do this analysis on your own, most people can't go to the bank, to their advisor who's doing their TFSAs and RSPs and really get a lot of clarity on this. Nothing wrong with those people, but they just not, it might be outside of their scope of availability. So the types of things that I do in my financial practice is I work with clients to solve their financial needs, and that includes their real estate. So I always start with a discovery meeting, and that doesn't cost anything. If you wanted to do a discovery meeting, all it is a meeting between us where we basically talk. And if that's sort of something that you might be interested in, I'll show you how you can connect with me at the end there. So a discovery meeting is just the information to figure out what I'm able to do for you and the problem that you're trying to solve. But if we did engage I did take you on as a client, then we would start to navigate all of the different options that I've analyzed until we got to an implementation of a strategy. And then of course, we would review this strategy over here. The types of work that I would try to do is I would of course do a cost benefit analysis to show you what it would look like if you were to buy this property and take on a second property, and what it would look like if you did not. So in this scenario over here, the blue line kind of shows the trajectory that you're on by doing nothing. And then the red line shows, what it would look like if we implemented that second property based off of a very, very safe analysis that I was able to discover. So again, this is incredibly, incredibly important for those people who are thinking of, making a real estate move, whether it be upgrading or downgrading or buying another property and figuring out how to fund it. And if you can't do the analysis on your own, you should absolutely consider taking a discovery meeting with me. So statistically, there was a study done, and it says when you use a good advisor, it typically multiplies significantly over time your wealth. And with real estate, I'm sure these numbers are even higher. And I've seen it over and over again. The types of advice that I'm able to give on the real estate side, which many other advisors are not able to give, is invaluable over the long term. So if you did want to connect with me in order to set up a time to talk, just to do a complimentary discovery meeting about either your financial situation or your real estate situation, by all means, assistant@latitude-west.ca. That's how you would connect to set up a quick complimentary call. Now, our next session will be Thursday, June the 10th at 6 p.m. To join us, we'll send out an invitation link over there. Or if you wanted to sign up right away, on my website, latitude-west.ca, workshops. And notice from last month to February, sorry, from March to April to May, the real estate market has shifted so many different directions now. Now we're sort of in this, all of a sudden, it's cooling down. So it's important to come to these things, especially if you're thinking of making a move in real estate and you want to look for an opportunity. So by all means, please sign up once again. So if you had any last questions, now's the time to put them in. And now here, if you want to connect with Mike or myself, Mike Stewart at mikestewart.ca or mike@mikestewart.ca, or you could phone him 604-763-3136. And just a quick reminder, the statistics that has been given today, if you would like the full package to sort of see all of the numbers and all of the latest data as to what's going on in the Vancouver real estate market, feel free to email Mike and ask him for this, and he would be, he can forward that on. If you've got any real estate questions, again, there's Mike's contact information. If you want to start a conversation with me, maybe do a complimentary discovery meeting, and I could see, you know, I could give you some advice as to some ideas of what you think you might be wanting to do with your real estate. By all means, connect with myself at assistant@latitude-west.ca. So here is a last question over here. Are you knowledgeable on the U.S. property rules and laws? Because I would need help, but I have one property in the U.S. and one in Victoria now, and I want to buy a condo. So my quick answer to that is yes, because I have several clients that own property in the U.S., including myself. So I own several properties in Canada and also property in the U.S. So why don't we start with a discovery phone call? Just reach out to my assistant at assistant@latitude-west.ca, and then I would be happy to continue the conversation with you. But what I'd like to do now is I'd like to sign off. And for those of you who are listening to the recording, by all means, if you feel that this is going to help one of your colleagues or friends, feel free to forward the link to them. Mike, thanks for the call, and I will I'll see you guys next time.
Thanks, guys. Appreciate it.